Let's take a look at Intel, beating fourth quarter expectations even as revenue declined for a third straight quarter. The chipmaker also issuing weak guidance for the first quarter, citing here seasonal weakness, macro uncertainty, and competition. This is Intel's first report since CEO Pat Gelsinger was ousted last month. The company appointed two interim co-CEOs as the search for a new leader continues. Shares right now of Intel, they are up here pre-market here, and I think with the incoming administration as well for Intel, they also have to continue to acknowledge how much of the money that they're expecting to continue to be dispersed for some of the efforts that have already initiated in chip fabrication and the factories that they've touted and even started to break ground on as well.
It's a little amazing to me that that Intel's actually trading in the green right now, up just about 1.5% ahead of the open, given the fact that the guidance was light. And I bring that up just in light of the reaction that we have seen to so many of the names that have already reported this earnings season. If you're not beating by a pretty sizable margin, you're not necessarily seeing the reward pay off the next day, especially when it comes to guidance. We talk so much about the focus here on guidance. So the fact that we are moving to the upside, I think also just shows how skeptical the street was heading into this report, just in terms of any progress that Intel has made on this front. In regards to that guide, though, there's a couple of things that analysts were pointing out this morning that I thought was interesting. JP Morgan, one of the analysts out, saying that they're blaming a lot of it on macro uncertainty, obviously PC inventory digestion, but also rising competition. It's that last component there, rising competition, that's going to be the huge hurdle here for Intel going forward. We talk a lot about the turnaround plan, the fact that it's going to take time to play out. And we're not talking a couple quarters. A lot of the experts that we've had on here over the last several quarters have very much chimed in and say that this is a multi-year potentially turnaround story here, and it's going to be something that's going to take years and years. And I remember the day after Gelsinger was stepping down, we were talking to one analyst, and he was saying that, hey, this could actually take up to 10 years. And I think that very much puts it into focus, just the disadvantage that Intel is at right now in regards to some of their peers, and how much it has to do in terms of catching up.
Yeah, and it really comes back to how much money they're going to be spending in that longer term period, in that time horizon that you were mentioning of 10 years. I think back to what was mentioned on the earnings call here. They're anticipating 2025 gross capital investments will be approximately $20 billion. That's at the low end of their previous guide of $20 billion to $23 billion, and that's reflecting further capacity adjustments in some of their production and staffing as well in Ohio and Ireland, better utilization of what they call their construction in progress as well. So you think about the investing and how that is ultimately going to have to pay off before investors and until investors have clear line of sight into where that will actually flow through to margins and then flow through to share price appreciation as well, to your point.